Welcome back. So I'm making this video for those who are interested in taking up a financial statement analysis uh, and modeling and valuation exercise. Okay? So if you are someone who's actually interested in learning these topics by doing, then this video is for you. Okay? And the company that I've chosen for this exercise is Narayana Hrudayalaya. So I already have done financial statement analysis and then I have gone on to model and value this business. So I've already done that work ahead of time. Okay. So in this video, what I'm going to do is I'm going to actually do three things, okay, or three sections, if you will. One is first, I'm going to talk about this business, the moats in this business, as per my understanding. Then that's section one. Section two, okay, I would uh, I would be actually giving you some kind of guidance, some guidance on how you could go about modeling and valuing this business. Okay. And section three, I would be just summarizing the outcomes of my own valuation exercises without actually talking about my projections and my assumptions. Okay. All right. So, so if you are someone who's actually landed on this video and you're not interested in learning valuation and modeling, which is fine, okay, then you can just skip right to the end of this video, perhaps the last 5-7 minutes, okay, where I would be concluding where I would be just summarizing my valuation. Okay, but again, that's not the intention of this video. Okay, all right. So, but if you're a serious learner, you really want to learn, then I can certainly help you. Okay, all I need some time of yours. Okay, so and to understand, if you're very new to finance, if you're very new to financial statements, then I'll recommend that you watch my playlist on financial statement analysis. So I think I have 3 videos there. So first I talk about financial statements, how they're linked, how they move together, and then I have another video on financial ratios and how you calculate and interpret those ratios. Okay, so please watch that playlist first. And once you're done going through those financial statement analysis videos, okay, then go to this company, Narayana Hrudayalaya, okay, and then uh, pull out the investor presentations, the Q4 investor presentations for this company for the last 3 years. So I'm talking about 3 investor presentations that you need to go through. Then pull out the last 3 year annual reports as well. Okay, and from those annual reports, okay, what you do is, okay, you pull out the numbers for the balance sheet, okay, the balance sheet, the P&L, and the cash flow statement. Okay, like I've done here. Go back 3 years in time and pull out all those numbers. Okay, all right, just the way I've and do this work yourself. Do this manually. I'll spare the spreadsheet, but I want you to do it yourself. Okay, right. Once you're done pulling that information, then you would be able to compute financial ratios and interpret them. And while you interpret them, you'll realize you'll have to check the notes to financial statements to better understand those ratios and make better sense of them. Okay, all right. And the second prerequisite of this exercise is that you need to have some understanding of modeling and valuing a business. Okay, right. And it's fine if you've not modeled and valued a business before. So in that case, you could do two things. Okay, either you watch my detailed playlist on business valuation. I think I have fairly detailed 8 videos over there. Okay, so I'll put the link up here. But if you think that's too much of an investment of your time right now, okay, then as an alternative, what you could do is you could watch either my the short version of my valuation videos, which are really the equity research videos on either Agarwal Industrial. I'll put the link up here. So either watch the valuation modeling part in the Agarwal video. Okay, I'll put up the video here, or you watch the my equity research video on Radiant Cash Management, which is another company that I modeled and valued. So these are like relatively short videos. Okay, those you can watch these 2 videos and you'll get some sense of how you model and value a business. Okay, so if you do that, you'll get some sense. Okay, and then you can apply that knowledge, whatever knowledge you are able to gain from these videos, in this exercise of modeling and valuing this particular company in Narayana Hrudayalaya. All right. Okay. Right. So with that said, okay, let's jump to section one. Okay, and at the risk of repeating myself, if you have any questions, please feel to reach out to me. Okay, I can definitely help you in learning financial statement analysis, modeling, and valuation. All right. So let's start. All right. So I have the investor presentation open. All right. So this hospital has a sizable presence in Kolkata and Bangalore, and they are trying to expand to other parts in India as well. In fact, they have some kind of footprint in other parts of India already. In some places, they have not done as well as in Kolkata and Bangalore. And in some places, they've also shut down their hospitals because they were not doing well. Okay. Right. But again, their focus market is Kolkata and Bangalore, and they are trying to get a sizable presence in Delhi as well. All right. All right. Now, see, what sets them apart? in my opinion, from other hospital chains is I guess five things. Five things. Okay. And uh, I'm essentially trying to articulate the moat in this business. And as always, I've used my equity research framework, which is the spreadsheet, to assess the moat, to understand this business and assess any moats in this business. All right. Okay. So I don't intend to kind of bring you through my business analysis in this video. Okay. But essentially, using my framework, which I've discussed at length in my equity research framework video. Okay. So using my framework, if in case you have any other framework, that's fine. Okay? I'm not trying to say that you have to use this framework. Just use anything. It's this framework is nothing but a spreadsheet in which you can capture all the notes that you've gathered from different sources and then kind of make sense of them. Okay? This is what all this framework really is. Okay, all right. So, uh, so let me talk about the moats as per my opinion in this business. All right. So let me go to the con calls. All right. So I have their latest earnings call transcript from FY24 Q4 open. Okay. See, when we talk about moat or competitive advantage, okay, to me, moat comes from doing things differently. Okay. That right now, as of this moment, other companies, other hospitals in this case, they're not doing that presently. Okay. And if you are able to excel on doing those things, okay, then you'll stand out, okay, and be able to attract more revenue and and margins and or what have you. Okay. All right. So the first thing that they're doing differently, which is a point of differentiation, is that they're the first hospital business to launch an insurance business. They're starting small. Okay? So here they speak about the current state of insurance in India. Okay? And they also go on to say that they are starting an insurance service of their own. That's what they say. And again, you can read through it. Okay? And also along with insurance, okay, along with insurance, they are also starting clinics. They're piloting with Bangalore. They're starting clinics of their own as well. In those, the purpose of starting those clinics is they intend to be more closer to the patients. That's what they say here. Okay. And they want to be provide a comprehensive range of services, not just complex procedures in hospitals, but they want to capture patients from the entry point itself. And to those patients, they'll also give them provide insurance as well. ये इंश्योरेंस भी ले लो देखो आपका सारे टाइप का केयर कवर्ड है इसमें ठीक है नॉर्मल प्राइमरी केयर भी कवर्ड है एंड टर्शरी केयर complex procedures in the hospitals also they will be covered or some portion of those will be covered by insurance in their network clinics and network hospitals. Okay, all right. So this is something they're doing uh, different. So that's one, insurance and clinics. Second thing is they are the only hospitals in India to have some kind of international presence. Okay, so they are present in the Caribbean island in the Cayman Islands. Okay, all right. And here they talk about, but yeah, people get very excited. Acha, international presence hai, so that means high margin revenue. While that's true, okay, but here also they highlight some of the challenges with scaling that business. Okay, all right. Okay. So that's what they highlight. So let me just talk through that very quickly. So what they tell us here is there are two kinds of patients internationally. One is insured patients, and the other is self-pay patients who pay out of their own pocket. And I made notes here. The insured wale patients, okay, if they are insured, those patients in the Cayman Islands, they prefer going to Florida in the US. They think they'll get a high quality care in Florida. So why to get them treated from Narayana in Cayman Islands? So that's one point. And the other is the self-pay patients जो खुद से पैसा देते हैं. Okay? Although obviously this hospital is cheaper than the hospitals in the US. Okay? So the problem with the self-pay patients is the value proposition to those patients is dampened by the fact that the cost of staying in Caymans is pretty high. So agar, say if there is a patient in somewhere in the Caribbean, okay, so he comes to Narayana. Obviously, the cost of healthcare in Narayana is low, okay, but then the cost of staying in Cayman Islands is high. So the value proposition of getting treated in this hospital in the Cayman Islands is diluted. Those are two challenges they are facing right now in scaling their international business. Okay, but to circumvent the challenge, to address the challenge, what they're saying is they need to influence the decision makers. They need to influence the government. They need to influence the health insurance providers. Okay. So there's a question of communicating it to the person who is able to influence the direction the patient moves in. Okay. So that's what they're trying to do. All right. So any which ways, so second is one point of differentiation is insurance clinics. The second point of differentiation is their presence internationally, okay, which they're trying to scale. Okay. Third is Third is, see, Narayana. Third is Narayana. This hospital is actually is the pricing of services that they have is very competitive because they want to have a mass appeal. They're cheaper than some of the hospitals you have in Delhi, like Max, Medanta. They're pretty expensive. In fact, when you compare them with Narayana, okay. So because Narayana wants to have this mass appeal, so that's third. Uh, Fourth is I'll have to go to. Let me see if it's there. Yeah, I'll have to switch over to a different con call. So I've jumped over to a different con call. I've jumped over to the con call from FY24 Q4. I think earlier I was talking about FY23 Q4. So in this con call, when their CEO is asked what differentiates them from other hospitals, then he speaks about that they have a diverse presence. Okay? He also speaks about robotic surgeries. What he goes on to say is that many procedures, medical procedures, they are actually doing it using robotic surgery. Okay, all right. So and then not only robotic surgery. Okay, the other is that once those procedures are done, they actually have very active follow-up mechanism, a patient monitoring system in place as well. So that's what they go on to say. Okay. And by the way, robotic procedures, if you are able to scale robotic procedures, they would be cheaper in the long run because they don't require a lot of stuff, right? Because it's done, large portion of those procedures are done digitally through robots, right? So in the long run, they prove out to be cheaper. Okay. So these are some of the points that kind of sets them apart. Obviously, other hospitals are doing robotic surgery as well. It's not that they are the only ones that were doing it, but again, they are actually double downing on robotic surgeries. Okay. And then the last point, I think, which is point fifth or sixth, okay, which kind of differentiates uh, them. And another point which sets them apart, in my opinion, is their increased focus on digital, on technology. Okay, so they have their own healthcare analytics arm, which they call Medha, okay? And they intend to commercialize it. So not only them, but other hospitals can also use it, okay, to do any healthcare analytics. Okay, so they've not. I don't think they've started commercializing it yet, but they have plans to commercialize it. So it yet to be seen as to what kind of revenue they get from commercialization of this particular healthcare analytics arm. Okay, so that's one. And plus, they also and also not only Medha, this healthcare analytics, but also they have developed some an app which they call Atma. Okay? And using this app, using a new software program, okay? What they're trying to do is they're trying to streamline the interaction between doctors, clinical staff, nurses. Okay, just so that their operations within the hospital are streamlined. They are able to treat the patients faster. Okay, all right. And again, they plan to commercialize this software application as well. Okay, so they have a very sharp focus on ancillary services like Atma, Medha, and they plan to, as I said, commercialize them as well. Okay, all right. And of course, I've covered insurance. Okay, all right. So these are the some 5, 6 things that kind of, in my opinion, set them apart from other hospital chains in India. Okay. And yeah, in case you're wondering that I kind of jumped from different points of difference, one point of differentiation to the other, I actually documented all of those things in my framework, business analysis framework here. Okay, so I leverage that in the background to kind of toggle across those different points of differentiation. Okay, and I can share this with you as well. All right. Okay. All right. So see, we spoke about points of differentiation. Okay, so we spoke about points of differentiation, which is really all these aspects, right, which I was talking about here. Okay. All right. Now, uh, another thing which I want to talk about is see how they intend to grow in the future. Okay. Business कैसे बढ़ाएंगे आगे. Okay. So definitely there is this focus on ancillary services. The other thing is that they plan to expand capacity. Okay. Using so let me in fact go to the con call sheet again. Right. So I'm back in the FY24 Q4 con call. Okay. So they are doing two things to expand. Okay. One is what they call debottlenecking. Okay. What it means is what they're explaining here is a lot of infrastructure is built for a time when most work was long inpatient work. Inpatient matlab patients come to the hospital, they get admitted overnight. Okay. So a lot of infrastructure is built for a time when most patients were most work was inpatient work. So we probably have too much space dedicated for that, and we're trying to change the layout. And so we are able to cater to a lot more very fast volume in and out. So all they are saying is, okay, they are actually trying to uh, focus more towards outpatients. Inpatient, the patients who are admitted in the hospitals. Outpatients are those patients don't have to be admitted overnight. They're treated during the day. Okay, but most of the infrastructure is actually built keeping inpatients in mind. So they're trying to change that because they also want to increasingly focus on outpatient volumes as well, patients who can be treated during the day. Okay, so this they're trying to do, but this debottlenecking they're trying to do, okay, by uh, doing two things. One is they are changing the internal configuration of their infrastructure, which they highlight in another con call. This is where they highlight. Okay, this is what they're trying to do. Okay, internal reconfiguration, just so that they can debottleneck and have more space in the hospitals, treat more patients, treat more outpatients. That's one. Okay, the other is they're also opening a lot of clinics to increase their outpatient and daycare capacity, which I already covered, because they want to catch the customers or the patients where they are. They want to catch them at the point of entry and be more closer to the customers. Okay, so they are doing these two things to actually get more outpatients or get into more primary care or secondary care. Okay, all right. Now, and so this is one way of expansion. The other usual way that hospitals expand is increase the number of beds, which they are also doing. Okay, and let me show you. And the other thing is they are, as I said, they are they're going the traditional way, that they are actually buying more land parcels to set up more beds, especially in Bangalore and in the Kolkata region. Okay, all right. So this is what they did. However, they don't specify, they don't give you precise guidance on what is the number of beds. Okay, that is something we'll have to estimate based upon the construction that they are talking about. Okay, all right. Okay, so this is on. So we discussed two things until now. We've discussed uh, the points of differentiation, and we also discussed the capital expansion plans as well. Okay. Now let me talk about one thing more, which is the tailwind, which is the demand, okay, in this industry. So, I've captured some notes here based upon my industry research and from the con calls as well. Okay. So the macro tailwinds in this industry, okay, is the aging population in India. I know that may seem like a misnomer, but what I really mean by that is that now people have longer life. There are a lot of people now above the age of 60, and that is only going to increase in the future, right? And they'll have healthcare needs. Okay, so that's one driver. The second driver is affordability. Okay, now India, obviously, as our GDP grows in the future, okay, so the GDP per capita obviously would increase. Okay? So patients would have more money in their hands, the net capita per income would increase, so affordability would increase as well. That's another tailwind. Not getting into specific numbers right now, just keeping it quick. Okay? Third is urbanization. Okay? That you have a lot of people moving from rural to urban areas, and a lot of rural areas are getting urbanized as well. Okay? So they obviously would have uh, healthcare needs as well. Okay? So those are some of the macro tailwinds. And besides that, in the Q3, okay, uh, in the Q3 con call FY24, what I read is, okay, let's see, right now, around 60 or 70% of healthcare delivery in India, that's so 60 to 70% of healthcare delivery services in India, they are privatized. Okay? And within the privatized healthcare, okay, 90% of private care bed capacity is unorganized. Small chains, small hospitals, they actually control 90% of that 70% uh, private healthcare market. Okay, all right. So only 10% of the market is organized. Okay, and so what they talk about in this con call is that they're seeing a shift from unorganized to larger or accredited hospital chains. So that's what they're seeing. That's what they talk about in this con call here, FY24 Q3K. Okay, so obviously this hospital chain like Narayana would benefit from that, or is benefiting from that shift. Okay, right. And then second demand driver again here is the increasing health insurance penetration. Okay, more and more people are opting for health insurance. And the third is increasing medical tourism in India as well. In fact, this is something in both these 2 points I discuss at length in one of my videos. Let me just very quickly just show you a glimpse. So here in this video, this is part of my business valuation series, in which I've made like 10 detailed videos on valuing another healthcare provider. Okay. So any which ways, so in this video, I actually open up IBEF, that is Indian Brand Equity Foundation ka industry report for healthcare. And I read the content that they have on medical tourism, that right now, India, as of last year, India attracted around 7 lakh tourists. Okay. All right. Yeah, and this is only projected to increase in the future because obviously India is a very cost-effective destination for medical treatments. Okay. All right. So now let me so we've covered three broad things. Once we've covered the point of differentiation of this business. We've covered that's my opinion. And the second is their plans for capacity expansion. Third is we also covered demand drivers, the tailwinds in this industry. Okay. And I've noted all these points in my business analysis framework Excel, okay, which I'm happy to share, by the way. Okay. Now let's get to the exercise. And once I give you what you need to do in this exercise, okay, then I'm going to summarize the outcomes of my business valuation. All right. Okay. So let's do that. All right. So now I'm going to give you what you need to do in this exercise. I'm just going to give you like some hooks and nuts and bolts that can help you. Okay. All right. So the problem statement really is you need to model, okay, and value this business. Okay. And at the risk of repeating myself, I've already done that ahead of time. Okay. Now I need you to do it. Okay. All right. So here's how I can help you. Okay. All right. See, when you start a modeling exercise, the first thing is you need to project out the key items in the P&L, the profit and loss. And what those key items are, first is revenue drivers. In the revenue drivers for this business, you have inpatients, the patients who are admitted in the hospital. You have outpatients who are not admitted, and we discussed that they are focusing a lot on outpatients. Okay. Third is they're also their ancillary services. Okay, like health insurance, because they are the first hospital chains to have a health insurance product of their own, right? And plus, they are commercializing some of their IT technology products like Medha, the health analytics, and Atma, the streamlining of interaction between doctors and other stuff in the hospital. So they are commercializing all of that. So there are those ancillary services, so all these three, they make up the revenue drivers. Within inpatients, okay, how do you model that? Okay, it's essentially a combination of number of beds, occupancy, and average revenue per operating bed. And by the way, again, I've discussed this at length in my detailed business valuation videos as well. But if you don't have to watch that necessarily for this one. Okay? All right. So basically what you need to do is you'll have to, since they do not kind of give you explicit guidance on what is the number of beds they intend to build in the future, so you'll have to estimate it. Okay. Use some logic to estimate it. The logic that I have used is, okay, they actually give you some guidance on ki kitna land parcel, how much land parcel they have acquired. Okay. All right. So what I did is I estimated based upon their current area, the current land that they occupy, how many beds they have. So I write that ki mota for every bed occupies around 500 square feet of space. Okay. So they already give you ki kitna square feet of space they are buying right now. Okay. So from that calculation, you can mota estimate ki how many beds they intend to build from their expansion in the near future. Okay, and you need to kind of do it for all the cities they are in, not for one geography as a whole, but for Kolkata, for Bangalore, for Delhi, so on and so forth. Okay, and then occupancy and average revenue per operating bed. And again, they do not kind of pointedly tell you ki kitna occupancy hai in all those locations, but you should be able to estimate that. Okay, in fact, let me show you a quick peek at my projections. Or why is this not moving? All right. So this is the spreadsheet. This has all these columns, okay, all these tabs. So in this operating metrics sheet, and I've hidden my projections up on purpose. Okay. So if you see for all the geographies, okay, for Bangalore, I've estimated beds, occupancy, average revenue per operating bed. Same thing I've done for the southern region. Same thing I've done for Kolkata, eastern, western. So I've done it for all. Okay, and that's what you need to do essentially. Okay. All right. So take an honest attempt. Okay. And you may struggle a little bit, but that's fine. Nothing is right or wrong. Okay. At least just think before you make an assumption and articulate your reasoning. I have articulated my reasoning here in the spreadsheet, and I'll forward it to you. Once you're done, making your projections on your own. ठीक है? All right. Now let me go back to the Excel. Let me go back to the slide. Okay. And by the way, for this modeling exercise, I should have said that up front. Okay? You should read the last 2 years के con calls. Last 2 years, matlab around 8 con calls that you should go through. If you think that's too much for now, okay, so what you can do is at least go through the Q3, Q4 earning calls or con calls, okay, for FY23 and FY24. So Q3, Q4 K con calls, so you have to go through them for the last 2 years, okay, because only then you would be able to make educated assumptions and take pointed guidances, use pointed guidances in your modeling exercises. Otherwise, you really would struggle. So वो तो करना पड़ेगा. Okay, all right. Now moving forward. So this is all then outpatients again. Once you kind of read all those documents, all those con calls, you would be able to estimate outpatients as well. Ancillary services is very hard to estimate. I'll be honest, I've not estimated any revenue from ancillary services. Okay, even if I do, it would have been a swag. It would have been not connected with the reality at all. So I didn't even attempt to do that. Okay, if you are able to do that, then educate me. Okay, I'll be happy to learn from you. Okay, all right. Then you have cost drivers. Okay? Cost drivers mean you have two fixed cost, doctor, nurses, equipment ki cost that you should model, and then you have variable or cost of goods sold as well. That should be able to model. See, this industry has high operating leverage, right? Okay. So if you expand, you may not have to spend a lot on doctors and nurses and medical equipment because pretty much you can reuse that when you expand. Yeah. All right. But initially you incur, whenever you expand initially, you'll incur a lot of fixed cost. And then you can reuse that fixed cost, okay, because fixed cost obviously would remain fixed. Okay. So as you scale, you'll have more revenue, more profit coming in, but your fixed cost would remain as such. So your profitability would increase over time. But initially, when you expand, your profitability would take a hit. Okay. All right. So anyway, so you need to, so mota P&L mein, you have to project out these revenue and cost drivers. So that's on P&L. Now let's talk about dusra important thing that we need to. One is the other thing is projecting the balance sheet key items. Okay. So in the balance sheet, there are essentially two important things that you need to project out. One is the capex, and the other is working capital. And within capex, first you need to project out. See, you've already estimated number of beds to be built. Now, if you read through the con calls, you would know कि कितना capex per bed होता है. So you would be able to estimate कि कितना पैसा लगेगा, कितना capex लगेगा to build those beds out in the future. Okay. Then they are also building clinics. So they also mention कितना capex होता है per clinic. They also mention that in their con calls. So use that information. Third is maintenance capex. Now I'm giving you a hint. I'm giving you some guidance of my own. ये estimate करना बहुत मुश्किल होता है. So usually as a practice, what I do is you can assume a capex of this year to be equal to the depreciation of last year. So that is what you can use in your modeling exercise. Okay. But feel free to use anything else so long as you can justify it. Okay. Working capital essentially first is receivables. Okay. So again, receivables you can use the past receivables per trend, or if you read the con calls, you would actually understand that there may be a change in the future. So you'll get an idea. You would directionally understand the future impact. Actually, what is happening is they are a lot of the patients are government patients, so government pays for them. But now they're increasingly focusing on, let's say, private patients. Okay? So which either those patients would pay from their own pocket or they would have some health insurance which would cover for their treatments. Okay? So they are actually, in some way, they are actually trying to reduce the revenue from government. Okay? And government takes a lot of time to pay them, right? So receivable profile, the receivables should reduce over time. That's essentially what you got to keep in mind when you model the receivables. Okay? And the second is inventory payables. इसमें you don't have to put a lot of दिमाग. जो भी last past का है वो use कर लो. Okay? Right? And once you're done, once you kind of done modeling P&L and balance sheet, once you are able to link the three statements together, then you also need to model debt as well, right? Debt again is a balance sheet item. And the only way you can model debt is once you linked all the statements, once you know how much cash is being generated every year. Only then you would be able to model the debt. Yeah. All right. So this is the exercise. So I'm just giving you some high level nuts and bolts, some high level guidance that you can use to get started with the modeling of this business. Obviously, I'll pass you my spreadsheet as well without the projections. Okay. Okay. So now let me go to the third section of this video, which is I'll summarize the outcomes of my evaluation. Again, I'm not going to walk you through my assumptions because that's going to defeat the objective of this video. I'm not going to walk you through my projections, but just the outcome of my valuation exercise for now. Okay, so let me do that. So this is section 3 of this video. All right. So before I walk you through my section 3 of this video, now I'm going to summarize my valuation outcomes. Okay. By the way, अभी जो business कर रहे हैं, अभी जो revenue कर रहे हैं, that's around 5,000 CR ka. Based upon my projections, okay, what I'm saying is they would be able to grow their revenue at around 9%, which so they'll do a revenue of around 8,700 CR. So this, by the way, this is in million. Yeah. Okay. So from 5,000, they'll grow to around 8,700 revenue from both India and Cayman Islands. And this revenue doesn't include the revenue that they'll get from ancillary services, only the inpatient and outpatient revenue from both India and Cayman. Okay. All right. And then for EBITDA, right now, they did a EBITDA of around 1,200 CR. मैं कह रहा हूँ in the next 6 years, they would almost double their EBITDA, or in fact, just slightly fall short of doubling their EBITDA. They'll have an EBITDA of around 2,200 CR. So they'll grow at 10%. Again, this is an outcome of the assumption that I've taken here in this sheet. Okay. All right, which I'm not sharing with you abhi. Okay. And the net profit also, right now in FY24, they did the profit of around 8,800 CR. मैं कह रहा हूँ कि at the end of 6 years, they'll grow from 800 CR to 1,200 CR का profit, net profit after tax. Okay. All right. So this is the outcome. This is my forecasted P&L. Okay. Now let's go to the valuation. So again, I've used both FCFE and FCFF. FCFE जो होता है, that is basically the free cash that's available for distribution to only equity holders. Okay. इसमें आपको if you do this valuation, you'll have to estimate debt. Okay. You'll have to estimate debt that you can only do once you're linked all the 3 financial statements. Okay. And then the other method of valuation is FCFF, which is free cash available for distribution to both equity and debt holders. This method में you don't have to project out debt explicitly, लेकिन balance sheet आपको तीनों financial statements तो ideally balance करने ही चाहिए. Okay, इसके लिए भी. Okay, all right. So for FCFF, see, I have the 6-year का projections. Okay, then I assume growth would slightly start diminishing, and then beyond 10 years they'll grow slightly higher than the risk-free rate. Okay, that's my assumption. Okay, and I've discounted at a 10% cost of capital, which I've arrived at. Okay, all right. You can just reuse it for now. Okay, so right now this business, the enterprise value of this business is around. See, so right now the everything, by the way, in the sheet is in million rupees. So right now the current enterprise value of this business is around 24,000 CR. Okay, that's what the enterprise value is. Okay, right. And so the fair value, enterprise value that I arrived at, which doesn't include the revenue from ancillary services, is almost, is just over 20,000 CR. So basically what I'm saying is that this stock is overpriced or overvalued by over 15%. So that's what I arrived at. Okay. Let me tell you, I just have taken a tracking position in this business. Agar girega, so I would invest more. Okay. And yeah, you can say that probably the 16% delta, or whatever, 10, 15, 20% delta of the overprice can be explained by their foray into ancillary services. Yeah, you can use that judgment, but I don't want to pay for them right now as an investor. Okay, because I do not know what kind of revenue they'll yield in the future. Okay, so what I'll do is, and again, this is not investment advice. What I'll do is purely education. What I'll do as an investor, because I have to disclose, if in case this drops, or girega, then I'll buy. Otherwise, I'll just stay put. Okay. All right. So anyway, this is the conclusion of my evaluation, that I find it the stock a little overpriced based upon my assumptions, because I'm assuming just like 10% growth in revenue top line and around 10% growth in their operating margin as well. So, and that is being reflected in my FCFF, in my undervaluation as well, or my of my of the fact that this company I find overvalued. So that's being reflected here. Yeah. All right. And FCFE भी मैंने किया है. उसमें you would see, because you have to project out debt, so it penalizes your free cash flow. So if you want to be ultra conservative as an investor, then you can use this method. The recommended method for this kind of business, which has a lot of debt, is FCFF. But if you want to project out cash flows for equity holders, then you can use this method. Okay. And again, the enterprise value, the equity value, that the market value that I've arrived at is around less than 18,000 CR. ये पूरा million में. 18,000 CR. Okay. So again, this business is also, as per this valuation, obviously, this business is also overvalued. Okay. All right. So this is the conclusion of my valuation. I know I did not kind of walk you through any of my assumptions. Okay. And I want you to build a capex and working capital schedule. And I also want you to project out the P&L and P&L items such as revenue and cost drivers, very similar to what I've done here for all the regions within India. And then for Cayman as well, you got to do the same. Cayman Islands के लिए भी आपको same करना है. ठीक है? And where you'll get stuck, write to me, I'll help you. and I'll forward you the sheet without the projections. ठीक है, I'll forward you the sheet. Okay, all you got to do from your end, you got to read the last 2 years के con calls that you have to read here. Otherwise, you won't, will struggle projections. Okay, और आपने अगर आप if you have less idea about modeling and business valuation, again the risk of repeating myself, पहला आप फाइनेंशियल स्टेटमेंट का वीडियो देख लो. ठीक है, समझ में आ जाएगा क्या फाइनेंशियल स्टेटमेंट्स होते हैं, कैसे लिंक होते हैं, वो आपको समझना जरूरी है. वो पहले वीडियोस देख लो. उसके बाद आप एक बिजनेस वैल्यूएशन एंड मॉडलिंग का वीडियो भी देख लो. पूरे 8 वीडियो डिटेल प्लेलिस्ट मत देखो अगर टाइम नहीं है, बहुत टाइम ले लेगा वो. जस्ट वॉच द वीडियो दैट आई एम लिंकिंग अप हियर. ठीक है, ऑलराइट, 1 घंटे का वीडियो है. स्पेंड दैट टाइम, विल गेट सम सेंस कि कैसे मॉडल करना है और वैल्यू करना है बिजनेस, एंड देन यू कैन अप्लाई इट हियर इन दिस एक्सरसाइज. ठीक है, ऑलराइट, थैंक यू.